and welcome to this week's edition of Straight Talk with Bren O'Brien and Tim Rowe from The Straight, brought to you by our sponsors, Darley and Inglis. Today, we talk about personnel changes at Racing Victoria and the broader challenge faced by the state's new funding model. We take a last look at Rosehill before the ATC members vote next Tuesday. In Bren and Bloodstock, we cast an eye forward to the Magic Millions National Sales Series, which kicks off on Sunday. We look at the legacy of Vinery's Peter Orton and the ongoing impact of Coolmore's Fastnet Rock. And in wagering, is this the end of early betting? We talk about plans to mandate owners to bet on their own horses, plus a couple of big fines handed out by the regulator ACMA. Tim, great to have you here as always. News this week that Racing Victoria have reduced staff. No specific numbers confirmed, but we believed around 15 to 20%. This article was pretty much one of the biggest articles we've ever had in the Straight this week. People are often interested when there are changes, but anyway, it's a not insignificant number of people that have been affected by this. The restructure was forecast by Aaron Morrison when he came into the role last September, the CEO. I guess, Tim, it's always difficult for people in these situations where people are leaving businesses and all those sorts of things, but it has been coming for a while, this change in structure and I guess resourcing from Racing Victoria.
Yeah, and it is across the board, but probably the higher profile ones are racing.com, and they're the people that the punters and everyone sees day to day on the TV and are sort of familiar with. It's as a journo, as you and I have been for a long time, it's unfortunate. You don't want to see any media jobs go or journo jobs go in racing, let alone wider media. There's not that many of them, full stop. So it is unfortunate, but Aaron Morrison, as you say, had suggested that would be coming, and I guess Andy Hoad had been appointed to lead the media business, and this is sort of the first major step of that, of cutting costs. It has reportedly cost them $15 million a year to run racing.com, and I think they lost $11 million last year, the deficit. So overall, Racing Victoria, so they had to cut costs from somewhere, and I guess that's before they cut elsewhere, maybe prize money and things like that.
Yeah, I guess the question is, so wagering's down 5% year on year. They've confirmed that, Racing Victoria. That's after coming down 10% last year. So if you look at that from a pure revenue perspective, it changes things. What's also changed is racing's funding model in terms of what the government provides. They no longer have the joint venture with Tabcorp that ended in August last year. Point of consumption tax has gone up. I'll get onto this aspect in a minute, but the revenues from point of consumption tax aren't quite what the government expected. Yeah, I guess down to the question of when does prize money get cut, because at some point, there was a discussion or when Aaron Morrison came in to say, look, I'll address the inefficiencies or not the inefficiencies, but some of the challenges and cost challenges within Racing Victoria to start with and work with that. And then we're going to work on what other things we can cost. And prize money is the thing that has gone up significantly in the last 10 years. Nobody wants to cut prize money, but we've seen a story this week out of France that they cut prize money there based upon wagering going down. If wagering and prize money are a function of one another, i.e. wagering goes up, prize money goes up and vice versa, surely, Tim, we've got to see this come back the other way across the board, not just in Victoria, but across the board. Queensland, New South Wales has got challenges. A drop in wagering has been factored into the ATC Rosehill decision, which we'll get into in a minute. Surely, at some point, we're going to have to see a change in the way that prize money is structured.
Yeah, you would absolutely think so. I guess from Racing Victoria's point of view, and it'll apply to all PRAs, before they do that, they have to be seen to be cutting costs elsewhere, which is, staff at Racing Victoria. As we've seen, RV have tried to make changes in the past, and, Trower and Jonathan Munns and people like that are very influential, have come down hard on, the All-Star Mile and prize money like that. So they want to see cuts elsewhere before the general prize money cuts seem inevitable. Whether they can stave them off, time will tell.
Yeah. Compounding this issue is that the Victorian budget, as I mentioned before, this week showed the state will miss its point of consumption tax projections by $29 million this financial year and $36 million next financial year. Key points around this: so 50% of POCT now goes to the industry as part of this new deal, which started last year, this financial year. Racing Victoria says it doesn't rely on government projections to budget, so it said it won't. I guess the fact that it missed its budget by that much won't affect the way that it does business, because it projects based upon its data, wagering data, not the projections of the government, which is fair enough. But it still means that the government is now anticipating it will give $17 million less to the three racing codes over the next 3 to 4 years. Now, whether that's what the racing codes are budget is another question, but we've got issues in Victoria where both Greyhound Racing Victoria and Harness Racing Victoria have got issues as well. Harness Racing Victoria in particular has got some significant issues around bottom line stuff. We've got Racing Victoria recording annual deficits, and I would assume they'll probably go down the same path today. Yeah, I guess they depended on this point of consumption tax model of lifting from 10 to 15% to be a way of dealing with the challenges of the wagering environment at the moment. But for me, it seems to have compounded it, Tim, not actually solved it.
Yeah, and those predictions have been way out or proven, and it's not an easy thing to predict. Wagering turnover and POC revenue, but you would hope maybe now those rather being possible. Well, they have been overly optimistic in recent years that maybe they've been overly conservative, and maybe the 70 million won't be as bad. So yeah, but as you say, RV have done their own projections, and they probably have access. Well, they do have access to live wagering data month to month and week to week to sort of maybe guide them more accurately.
What will be interesting is, does this change approaches? Like, because I guess I'm thinking about POC, it applies to sport as well, and so therefore does the AFL? Sorry, does the RV look to sit there and go, all right, is there other ways that we could boost wagering, or at least if some wagering is leaking from racing to sport, how do we do that? The broader questions is the government is still projecting that these revenues will continue to increase year on year. All right. So in my mind, how do they do that? How do they make that leap of, given everything we've seen over the last few years, what are they seeing that we're not seeing? That suddenly wagering on racing is suddenly going to jump through the roof. We'll get into some more specific wagering issues in a little bit, Tim, but I think for me, that's a broader question. And it feeds back to this question, right? So let's have a look at this Rosehill issue, right? And we'll jump to Rosehill now. Wagering decline has been cited as a key reason by the ATC, the Australian Turf Club, for their consideration to sell Rosehill. Now, whether that fits particularly into that and whether that's part of the parimutuel decline or whatever else, you can debate that. But this is being cited as a reason for strategy and policy within the racing industry. For me, it's a bit of a dangerous one, and it's a bit of a, I think the broader racing industry needs to get a hold of what this wagering issue looks like, understand and cut its cloth accordingly. And I think otherwise, in a few years' time, we're going to have a lot of, pretty much every jurisdiction failing to meet its mark on budgets. On Rosehill, Tim, we're 5 days away or whatever we are. Yep, next Tuesday. So it'll be obviously a long-awaited time to determine this issue, maybe not once and for all, because even if it's a yes vote, we're still going to get the government's approval on $5 billion. But what do you think the number one issue that's in the ATC members' mind when they're casting their votes for this ballot, this crucial ballot next Tuesday?
Well, I think it comes down to trust, and I don't think there's actually that many swinging voters. Even right from the start, ATC's tried their darnest with text messages and all sorts of things more recently, and the email which the Straight reported on with the refuting the Save Rosehill points and some of the negatives. I just don't think there's that many, as I said, swinging voters. So it'll come down to trust. Do the members trust the ATC board and then the government to come good with at least $5 billion, and then trust them to actually be able to undertake a project of this magnitude, which is the biggest in history. And we see with even small projects, they usually overrun on budget and different things go wrong. So I think it's a vote on trust, and we'll see what happens. But I can't see the people changing their minds in the coming days. They've made them up.
Yeah, and I would think that my mark, I think you and I sort of indicated last week, we're probably 70% sure they'll say no and 30% sure they'll say yes. So it's sort of one of those ones where probably that my mind hasn't changed on that. Has yours changed on that in the last 7 days? Anything you think in your mind that the yes vote might get up?
No, not significantly. Maybe it's closer than it was last week, but I think people are very hard and fast in their views, certainly the people I've spoken to and sort of witnessed. So I can't see it changing. And then there's probably a group that don't really care that much and haven't consumed all the information like we have.
I guess the other thing too is I've said, as I mentioned before, even if the members do vote yes, then the government needs to agree to the terms of the deal that's put forward, and that's no guarantee. There's suggestions that there's already sort of a tacit agreement or whatever, but none of that could be possible under the current legal framework of how this is all worked out. So just to put it in context, $5 billion, I believe, and I've done a bit of research around this, would be the most amount of money ever spent by government on a land acquisition in Australia. It is a massive project. If you consider that Moonee Valley has been working on their project for 15 years and the initial contracts around construction were signed in 2017, so what's that, 8 years ago, the ATC on a very basic level has to deliver $1.9 billion in infrastructure in the next 8 years. That seems optimistic, probably to put it politely, on that thing, let alone the fact of the price that the government's going to pay. However, if the government does pay it, look, there is an argument that it's too good to be true. If someone offers $5 billion for your house now, you take it because you don't know if they're going to be there in 10 years' time. There is a discussion around the metro, all that type of stuff. But I think that there's still a broader question. I think, should this get through as a yes, I think there'll be a significant political pressure put on the New South Wales government as to why $5 billion is a good investment, given the way the state of the economy at the moment and some of the challenges around it. I think the broader challenge too, Tim, without getting too fine a point, and you can probably comment on this a bit further, but I think that this trust that it's lack of trust in those who work in the industry, it has divided the industry. Now, there are some reasoned, clever, very intelligent minds in this industry. It does feel like it's been a very divisive issue, and whether those divided parts can be brought back together, regardless of the result next Tuesday, I'm doubtful of that, Tim.
I agree with that, Bren.
The following content is sponsored by Darley. Traffic Warden offers a lot of value to breeders this season. A Group 2 winner at 2, only just missed in the Group 1 size, and then came back stronger at 3 to win the Run to the Rose and push broadsiding right to the wire and the Golden Rose. Add to that the proven Street Cry sideline and an impressive physique, and you've got a stallion that offers real quality and an accessible fee. He joins the Darley roster for his first season at Kelvin's side. Right, on to breeding and bloodstock now, Tim. Magic Millions next week. You and I are heading up in the next couple of days up to the Gold Coast. We've got the weanling sale, we've got the mare sale, and then we've got the yearling sale on the week after next. What are you expecting? Let's talk through the various aspects of the market, and given what we've seen, what happened with Inglis and Sydney, and what else is going on in the market. What are your expectations? Let's start first with the foal market, Tim. Is you confident that the good results, the very strong results we saw in Sydney a couple of weeks ago, will be reflected when we get to the Gold Coast on Sunday?
Oh yeah, absolutely. I'd be confident of that being the case. So those high, people paying yearling prices for the very best credentialed weanlings, whether that's to mostly trade on, or whether they go, you know what, if I don't get the price I want in the yearling sale ring, I'm happy to race that horse on because it's got the right credentials or buy the right stallion, all those sort of things they look for, and I think that'll be strong. And then there'll be the $5,000 and $10,000 weanlings that it'll be hard to sell because there's just not a market for them, and breeders will have to not give them away, but sell them at a discount if they want to take them off the books. And is an expensive thing breeding and holding weanlings through to yearling stage and then racing them. So or having to keep them to race, maybe even to 2-year-old sales. So it's one of those things, cut your losses, and that's what weanling sales are. That's why it's such a big variance, is because there's those high quality ones that are basically worth yearling sale prices, or giveaways, $2,000 and $5,000. Yeah,
there's a divided nature by its market, and there's fewer players in that market as well. It'd be interesting to see how many end users are also end users, let's call them trainers effectively, or to actually buy into that market as well, and seeing opportunities there where the yearling market might be a little bit bullish next year. The mares market's an interesting one. We've probably seen, to be fair to Inglis, them take a little bit of share in the premium mares market. They had a bumper English chairman sale. It was a remarkable results for them. But there's still a lot of quality here in this mares market. And again, it can be a little bit divided. There are some that are, I guess the mares market's a little bit different because the digital market has taken out, I guess, some of the bottom end of that market over time. But I think we're still going to see plenty of fireworks there on Tuesday and Wednesday, aren't we, Tim?
Yeah, particularly Tuesday. Zoo Gotcha, there's she could break the record, 6.6 million set last year by Imperatriz at the Gold Coast sale. So there's talk she could smash that if the big players get on her. She's got a great pedigree, race performance and type. So she's sort of got it all. And, those, for some of those buys at the top end, the Yulongs and the Coolmores, and even maybe we'll see Japan were active at Chairman's, perhaps the US and Europe as well, other high-end breeders there, especially with the way the Australian dollar is, it's very low at the moment, becomes quite appealing to and not as expensive as it may seem, even at 6 million plus.
Yeah, it'll be really interesting to see how that goes. So Gotcha's a rare offering, and there's plenty of other remarkable quality on there. We've got a tissue for sale, and who's a 3 or 4 time Group 1 winner. We've got some quality horses. So Australian market is so fascinating because these mares go on the market, Tim, and that's probably the difference is where overseas, maybe in America, they're a little bit more commercial, but certainly in Europe, it's hard to get into these families and hard to get these elite mares. The fact that Yulong have been able to build such a formidable broodmare band in such a short period of time has been tribute to the fact that they can go to the market and buy these mares, where if they're going to Europe, these high quality mares with elite pedigrees, you just can't buy them, can you?
No, and that's right. The breeders hold on to them, so that's why I think partly Mr. Zhang and Yulong have focused on Australia because they are viable and they're increasing their reach in Europe and even going the American sales. But those, we've seen breeze up sales in France and even Phasey Tipton in Kentucky this week. Still very strong prices for that top end, and that'll flow through to Magic Millions, I'm sure.
Yeah. I've just got to reference that. I mean, how would you describe the mood in the bloodstock industry at the moment? It seems remarkably bullish given a lot of the uncertainty that's going on elsewhere in the world.
Yeah, they just seem, I guess if you're in the game for the long term, you're prepared to ride the ups and downs, and they are significant. It is like a big roller coaster, the industry, especially breeding and all aspects of it. So they seem very positive. And if you are buying a mare to breed with, especially an empty mare this year, that's the foal's not born until 2026 and you're not selling until 2028. So a lot can happen in that time. So you do have, I guess, time on your side to sort of ride out the variance, and it's not an immediate turnaround sort of investment.
Talking about a lot of time, Peter Orton retires from Vinery this week, soon to retire. He's announced his retirement after 25 remarkable years. He's built that brand from scratch in Australia. Obviously came in through American investment, sort of turn of the century. It's had some change of ownership across the years, and Peter has been the constant force. We deal with Peter a lot. He's one of the industry's great gentlemen. He's also, one of the great minds of the industry, very generous with his time and to talk to. Vinery's position in Australia has been very important at a time where, probably at a time where Coolmore and Arrowfield were coming through to be quite very dominant forces. It was really important to have other, strong, committed stallion farms, having a crack in this market. And Peter's been a really guiding light as part of all that, hasn't he, Tim?
Yeah, he's softly spoken, but the word respect, I think, sums him up from everyone. Just what he says, if he says something you want to listen, he's very knowledgeable. He's not over the top. He doesn't exaggerate things. He just says it how it is. And, he has taken on, he's built Vinery. He's sort of left it in a very good space at the moment with Ole Kirk coming through. The stallion game is incredibly difficult. Huge amounts of money invested, and to convince the shareholders that they have had in that time, Dr. Tom Simon from America, and then Greg Perry's and Neil Werritz have come through, and Jerry Harvey and John Singleton through that period to manage those wealthy individuals and let's face it, some of them with egos to garner the respect that Vinery has, just the way they conduct themselves, and Peter himself and the horses they've been able to breed. It is a great farm and great stallion operation.
Yeah, we had intended to play an interview that you conducted with Peter on the week, but unfortunately the audio quality didn't quite measure up to scratch, so that's fine. But anyone who's spoken to Peter, understands his influence and what he's being able to do. What I have as a key memory of Peter, when you talk about these big businesses, right, and you talk about businessmen and big money and whatever else, I was at the Stallion Parade at Vinery a couple of years ago, and it was the morning after More Than Ready had died in America. And that was a sire who had obviously made Vinery in a international sense as well, because he was an American shuttle sire that came over here and was phenomenally successful, had a terrific record, and what a great legacy he left. Peter was close to upset to talk. And he rang me back later on after I'd left and said, I'm really sorry about that I didn't really have. I said, it's actually really, so if you ever feel like, and it's a picture that's we've been used a lot this week, if you ever feel like this is a business and these people aren't connected with these horses, have a think about people like Peter Orton and what he's been able to do at Vinery and his connection that he's had throughout that. I think it's a message to us. We talk a lot about the business of this industry, and that's our remit here at the Straight. But someone like Peter is a prime example of that connection and that that importance in that the animal is first and foremost. And so Moving on quickly, and speaking of a legacy, quick reflection on a piece I wrote this week about Fastnet Rock, who will be Australia's champion broodmare sire for the second straight year. He's miles ahead on that and cruising away. He's had some terrific recent records, Reserve Bank winning the Goodwood recently as well in that space. But what the piece did reflect on, I just want to sort of point out what he sits in really rare air, Fastnet Rock. He's currently sixth in the general size table, of course, primarily due to the deeds of V. Sistina, who's bred overseas, but has been Australia's most dominant racehorse and will be champion racehorse at the end of the year. Fastnet Rock. So the last time a stallion who won the broodmare size title finished top 5 in Australia was Danehill about 20 odd years ago, which is his own sire. So he sits in a realm of horses like Danehill, Reduced Choice, Zabeel, those champion sires who became champion broodmare sires. His legacy is remarkable. And I think through his daughters, and his daughters were always his strength, I think Fastnet Rock, like if you look at his best horses and throughout the journey and even just at through sales team, I mean, he has continued to leave an indelible mark on Australian breeding, bloodstock and racing, a couple of years after he was pensioned from duty at Coolmore.
Yeah, definitely. As you touched on, I think definitely, I think it's fair to say his sire sons haven't completely knocked it out of the park. I'm not saying that they won't, but certainly his mares, I think they're strong horses, and they throw that into their progeny and can cop work and training. I think that what makes them so good makes him so good as a broodmare sire.
The following content is sponsored by Inglis. Don't miss the Great Southern Weanling Sale at Oaklands on Friday, June 13, the final live sale of the Southern Hemisphere season. The 320-strong catalogue includes weanlings by leading stallions Toronado, Too Darn Hot, I'm Invincible, Zoostar, Wooten Bassett, Oleg Kirk and Justify, as well as the first crop of 9-time Group 1 winning champion Animo. The Great Southern Weanling Sale has long proven the right option for buyers, whether they be pinhooks or end users. Sale graduates such as Montefilia, Behemoth, Extra Brute, G-Trash, Luda Fox, etc. have all been Group 1 winners in recent seasons. The sale also continues to be a proven source of pinhookers looking to achieve quality returns. Catalogue is available now at inglis.com.au. All right, Tim, we round off as we often do on wagering. And actually, this is an interesting one. We're going to put a story up, that'll be probably up by the time most people listen to this podcast, about early markets and TAB's decision to ditch pre-race day markets for non-metro meetings, and pretty much for the majority of non-metro meetings, i.e. not Wednesdays and Saturdays, putting up markets on the day rather than the day before. Now, it seems like a nuanced thing, and maybe it's something that affects pro punters more than it affects the day-to-day punter. But you and Warwick Barr have been digging deep into this issue this week. What are the impacts, do you think? And will we have a situation where this is the new norm, or will others feel the breach?
I think overall it will be the new normal, at least in the short term. But there's just, personally, it suits me fine because I'm not betting every day or looking at everything, but I'm not that organised that I've formed an opinion 2 days out from what I possibly want to back. But yeah, it's a very small percentage of the market and turnover that is knocking off the first markets. They are 130, 135%. So then the professionals are knocking, really taking the big overs or the mistakes, so to speak. And I think from a Tabcorp perspective, they've taken a strategic decision. They are more exposed than any of the other corporates because they have the retail outlets where, people can bet cash and they're not, Tabcorp aren't exactly aware who's placing those bets. Whereas, if it's an account, they can limit it to win $1,000, say, and they know who it is and blah, blah, blah. And they can, where, the other corporates are protected to a degree too by minimum bets, particularly in New South Wales. Victoria's a bit different, where as soon as the market's open, there's minimum bets. But again, the online corporates can monitor those accounts. So, I think I'm all for it. I think certainly watching markets this week, part of the thrill of betting is trying to get the best odds and what's firming and what's not. When they're released 24 and 48 hours in advance, that's all done, and you miss that by the time most punters get around to looking at what's happened. Well, nothing happens really until the last 5 or 10 minutes. So, say Corowa on Monday, I was looking at that, prices open and horses were $6 to $3, and then they'd bounce back to $5, and you can, judge, do I hold or do I bet now? All that sort of part of what's appealing about betting on racing, I think, as opposed to probably sport and other than certainly casino games and poker machines and things like that. It's
Yeah.
just, I think it's part of it, and so I'm all for it. Long may
Market
it
vol-
continue.
Well, market volatility. I mean, the markets have been pretty stagnant for a while now, haven't they, Tim? You look at every corporate's pretty much got the same odds across the board, and you don't feel like there's a lot of variety there, and there's not too many willing to make a stand. And the reason is because it's a hard business for the smaller guys in particular to do that. Now, you can see from Tad's perspective why they would do this, because if they're putting up markets getting knocked off by the pros or the big punters, right, and they're getting those odds knocked off, and they put a horse up at $4 and it comes into 260, then the other corporates just go up at 260 or 270. It's not really, it's Tab's taking all the risk, and Tab's trading team, are doing all the work, and then effectively getting, the others are going to school on that. So it's a competitive advantage. I think it's a bit of a sign for Tab that they're a bit more of they're a bit more active, less passive in the way that they're dealing with things in the Gil McLaughlin era, a bit more competitive, and I think it changes things. The probably question is, I said, does it affect a recreational punter? Probably not a lot, unless you're up there at 9 o'clock. There is, obviously this notion that some of these guys have access to APIs, which gives them a distinct advantage in terms of timings of markets as well. I guess it poses the broader question, are the pros in Australia too sharp for the fact that some of these smaller operators can't afford to be the ones that stand out or be left on highest price because they'll just get smashed?
I'm not sure about that. And there's one I spoke to that's in the story you referred to, Bren, who focuses on New South Wales racing. Yeah, that's just one. But they're not all landing on the same horses. People do it different ways. And especially under the new environment, markets overreact. Horses go too short, and horses that you thought, you know what, I don't think that's a fair price, drift out too far. And, that volatility, there's more volatility in the market, open to more punters. I think it's, there's nothing you can do about it. I don't think that's the case. Yes, those big professional syndicates do pretty much shape the market, but, I don't think it's to the detriment necessarily of everyday punters, particularly under the new environment.
Yeah. Yeah. You just wonder at some point in the future whether it's just going to be a battle of, in that pro market, whether it's going to be a battle of, my AI versus your AI, make that work out, because it seems to be trending more and more towards automation and artificial intelligence. And that probably is not necessarily for the net benefit of racing, because one of the great values of racing, it is an opinions game. So it's the way that it works. I wanted to also quickly touch on the story you put up this week about decision by the Perak Turf Club in Malaysia to mandate a bet on a horse in a race if you're an owner, effectively putting up ownership fees to a certain amount where, you know, details of this, but it's effectively what, a $200, $250 each way bet on your horse in every race based upon the ownership fee you're paying in order to boost the parimutuel pools and hopefully disincentivize illegal gambling. Thoughts on that, Tim? I mean, it created a bit of a reaction, a bit of a stir, and Malaysia can be a little bit of a interesting place in terms of they do some interesting things over there that probably wouldn't do over here. But do you think that will have an effect for them? And is it anything that you look to mirror elsewhere, do you think?
Well, I've changed my opinion. When I first came across it, I got informed about what the club was doing. I thought, well, that's outrageous. But the more I think about it and the more of what I've been told and seen, those parimutuel pools are just tiny before. It's like betting on the Sky 2 dogs and there's $500 in the pool. No one wants to, you're betting against yourself. So it's basically the owners are now seeding that market effectively, and it might trigger a bit more, turnover, just people a bit more confident in the pools. Mightn't sound like much, but say there's a 10 horse race and there's 5,000 in the win pool and 5 in the place, and they do love an each way win place bet over there for whatever reason. That's significant. That might be, a quarter of the overall win pool, or, so it is a significant amount of money, and it just might make it a little bit more stable, those prices. I think there might be a little bit of an owner protest this week. I think there's only 5 or 6 races at Ipoh or Perak, but a lot of those do use the illegal exchanges, the city bets, and so I guess maybe they can put more of their money through the pools. It'll be interesting to watch, but something has to be done to make it viable for the clubs over there, just given the leakage to the illegal exchanges.
Yeah. And I guess, we sit there and sort of look at it and go, what's going on there. But like, given the way our tote's going here and given some other challenges that we've got, and I think, to be perfectly honest, if margins keep going up, we spoke before about the challenges with wagering turnover and whatever else, there's no doubt there is significant leakage in Australia to outside unregulated betting markets. And that's a major challenge for Australia to deal with that medium to long term, short term even. I'm not sure we'll get to this point. I don't know how I feel about having a couple $100 each way on my horse that's running in Mount Gambier on Sunday, but given her form profile. But, maybe you put your money where your mouth is and make it happen. But I don't think owners in Australia would, be happy with that, given the costs of ownership in Australia regardless. But anyway, it's an interesting little quirk, isn't it? The other couple of things I wanted to from a wagering point of view. PointsBet fined $500,000 last week, and Unibet $1 million this week by ACMA, who appear to have sort of, gone to the gym, bulked up, and come back and ready to throw a few punches at the wagering industry, and especially around issues around challenges around responsible gambling and the bet stock program as well, which is what Unibet's been found to have run afoul of. So it's bit going on that regulation space and taxation regulation, fees. We hear all these things all the time from the bookies about their challenges. It's certainly part of the broader picture when it comes to wagering. Okay, thanks for joining us on Straight Talk, brought to you by our fabulous sponsors, Darley and Inglis. Don't forget to give us a rating wherever you listen to us, be it on Podbean, YouTube, Apple, Spotify, all the places you can get your podcast. Give us a listen, give us a rating, send us an email, editor@thestraight.com.au. Tell us what you think we should be talking about and maybe a few interview subjects we might want to get a hold of. Yep, and we'll talk to you again next week. Thanks for your time.